Om Lokaha Samastaha Suki no Bhavantu. May all beings be happy and peaceful. Hey, what's up, everyone? It's Phoenix here. I hope you're doing well. Thank you for tuning in and supporting my channel. Today will be a dedicated cryptocurrency video in which I'm going to explore exactly why I believe 2023 will be the year that this bear market ends. And I'm going to give some approximate dates based on previous history. I'm going to actually share a few different models with you, so bear with me. The first announcement that I wanted to make before all of that is that I just yesterday released my small cap superstars report for 2023-2024. Those are my small cap gems that I will personally be investing in preparation for the next bull run. I haven't yet invested in those, but I am releasing that information to members of my community. There's more information about that report on my website, and it is pretty reasonably priced in my humble opinion, especially for those of you that are investing even just $1,000 in some of these. A lot of these have the potential to 50 or 100x, and I've actually filtered through 1,000 or more projects so that you don't have to. I've spent hundreds of hours compiling this report. It's about 42 pages long in PDF form, and you can read more about it. You can read the introduction on the website. So let's dive in and take a look at the Bitcoin chart now. So what are all of these lines? Let me explain first. These first lines here, these solid white lines, are the halving events. And as we all know, when there's a Bitcoin halving event, it creates some scarcity. It creates a positive push up in the price, generally speaking, and that was very obvious in 2012. It also was obvious after the 2016 halving, and that was back in July. And then again, we see the third halving in May. Was it May of 2020? Yes, May 11th, I believe, of 2020. And you can see the price action that followed that. Now, we don't have another halving until it is going to be, I think it's the 16th of June, 2024. So that is a ways away, but we do have some other data that we can look at here. And if we take the length of previous bear markets, so for instance, here in 2014, 2015 bear market, this was the longest by far. It was 697 days. And the price from there dropped down, I believe it was about 85% or more. Yeah, about 87% during that period, okay? And then the 2018 bear market lasted, it was shorter, it was only 514 days. And the price also dropped down about 84% during that time, okay? And so at present, we're about 416 days into this bear market. So if we were to use this previous 2018 bear market as any indication, that would mean that this bear market would end at approximately April 7th, 2023. That's actually only 3 months away because, again, we're 416 days in. So we're actually 3/4 or more into this bear market if you compare it to the previous bear market. Now, I'm not saying that it's going to be precisely around that date. It obviously has not been the case historically. But if we take the 2014-2015 bear market, that was 697 days. The end of that would be October 10th, 2023. And if we go somewhere in the middle here, we're looking at July 9th. So if we average those two, then July 9th would mark the end of the bear market. Now, how am I determining the end of the bear market? Basically, we're looking for a long-term break in market structure, usually a trend line that breaks. And I am, of course, not waiting for the retest, just waiting for a strong break, some momentum, some movement to the upside after a long accumulation phase. And that was very obvious in both of these cases here. Of course, we had all of the bear market history to go off of. And so now, in this case, also, in each of these bear markets, we had what was known as a selling capitulation event that was fairly obvious. And you saw here in 2018, there was what appeared to be some accumulation, but then we had a big, strong move to the downside here. So this was the capitulation. It doesn't happen, it rarely happens in one candle. maybe in a weekly candle, but you see this was very strong selling, marking the end of the markdown phase. Okay, and then again here, you could say that there were actually numerous capitulations here. There was one here, very strong rejection wick. This is a key sign, okay? Very obvious sign here in the second instance. So in each of these cases, these were capitulations. This was also a secondary test according to the Wyckoff method, which was quickly bought up. So this is actually what you want to see in accumulation. We have not seen that yet. Okay, we don't have enough information to determine whether we are in an accumulation phase. We haven't had a really strong push down since this move. It sort of paused midway. Now, had it pushed down much further here, then I would have been more eager to call this the early stages of accumulation, but we haven't had that yet. Now, if we go off of the previous bear market and we just throw up the fibs for a minute here, I'm going to look at the 0.25 area here, which is a curious level because it's also a level of, it's an SR, it's a pretty pivotal SR zone that you can see here on multiple occasions during the 2019 phase here. You can see that it was resistance, 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 and then flipped into support here. And that marked the origin of this major move that led into the most recent bull market. Okay. And so this is a significant area, and it would not surprise me to see Bitcoin revisit that area in the coming months. And so you can see that we are holding support at around 16,200, but there's this whole area in here where it was a very thin move, as we like to call it. And so that means that in all likelihood, with the momentum that we've had leading into the end of the year, at some point, maybe not right away, but at some point, there is a higher likelihood that it will at least try to push down to the 12, 13K region. Okay, but it may not happen. It doesn't necessarily need to happen. But the other evidence that we have in support of this is that we haven't really seen a strong selling climax. We haven't seen a capitulation. These are strong movements to the downside, but it's not quite strong enough if we compare it to previous bear markets. So we're still looking for that in order to properly identify accumulation. And a lot of the times you can't really identify accumulation right away. What needs to happen is we need to have multiple secondary tests. So multiple times where the price comes down and is rejected, okay? And it's not a sort of movement like we've seen here in the current range, where it's sort of chopping around in a very tight range. There needs to be actual much stronger moves with usually longer wicks. So if we see another wick down that's quickly bought up, if we see another retest down at the bottom of this range, 15,500 or so, and that's quickly bought up and it moves all the way up at least to the mid, ideally it moves all the way up closer to the top of this range here, then we could say that there's a stronger argument in favor of accumulation, but we haven't seen that yet. So all in all, I would say this is very positive, because if accumulation starts, I would say that accumulation, if we don't see another strong move down in the next month or so, then I would also give more credence to the present accumulation argument, because we've seen so much. We've seen so much in the way of black swan events. We've had basically the recession has been priced in already over the past year with all of the rate hikes. The Fed has been rugging us for a year straight. So if we don't see another move down early 2023, then in all likelihood, it's going to continue to chop around here, and this will be the accumulation phase. And we want it to, realistically, we want it to be as boring as possible for a period of time, so that people lose interest, and then when smart money starts to gradually really accumulate in earnest, then we'll be able to see that, and we'll be able to see it's very subtle. You'll see those attempts to push it down. Those are tests. Smart money is testing to see if they can push it lower, and then seeing who's stepping in, what kind of liquidity is entering and exiting. Okay, so it's very subtle, and we haven't quite seen the full extent of accumulation yet, but I think it's just around the corner. I would be very surprised if April 7th, according to the previous bear market, if that marked the end of accumulation, because Mind you, these zones here are marking when accumulation has completed and the price breaks out from that range. Okay, so I don't think this will happen here. I'd be more likely to say sometime in end of May, June, leading into the solstice. That would be, if I had to guess, and again, this is a guess, I don't have a magic crystal ball, but based on what I've seen with the price action and based on what I've seen with the moving averages, they have continued to slope down, but it's starting to lessen. The slope is lessening. It's starting to flatten out. This is what we want to see. Now, another thing to consider here is that we may not just see, while we all want to see a straight accumulation and it's nice and neat here and something like this, and I did mark this out months ago in another video, we want to see something like this. That may happen, but it may also be that we repeat what we saw back here because there has been a lot of uncertainty with the socio-political or geopolitical factors that we've been dealing with the potential for war. And let's face it, we are in it's a war right now, but it's an economic war. It's not a hot war. So this range here, it wouldn't surprise me if we see a repeat of that. So even if we do break out of accumulation sometime in June, July, it doesn't mean that we're in the clear, okay? And so I think that for the next year, year and a half, and leading up to the fourth halving, this is very much going to be a trader's market, not an investor's market. And so I am hesitant to invest in spot. I don't have any spot positions right now, actually very few spot positions, and I'm kind of locked in. And so I'm going to be extremely careful when it comes to investing in the small cap superstars because I need to see not only accumulation with Bitcoin, I need to see it break out, but I'm going to be wary of even more black swan events, maybe in the form of regulation. Ideally, we get some clearance or some idea, some clarity around regulations before we break out of accumulation, because that would give me a lot more confidence moving forward. So I hope that that's helpful for you. I want to keep it as brief as possible. Leading up to the halving, usually there is a surge in price the 3 to 6 months prior to the halving, and then the 3 to 6 months after the halving, it's no holds barred. It's a blast off from there. And actually this halving, this third halving, we had a little bit of an exception because of the COVID black swan. So you always have to take into account the possibility, however remote, that there will be another black swan. Maybe it's a pandemic, maybe there is a hot war that breaks out, but they've pretty much thrown everything that they can at us at this point, and I am hopeful for 2023. I think at the very least, we're going to see a lot more price movement, and I think we'll see some surprising moves to the upside. Now, I wouldn't be over eager. Again, I would not get too excited. If we do see a move back up, especially in the next couple of months or so, we see a move all the way back up to maybe 20K, 21K. Just remember that's still below this previous all-time high. So as long as we're below that, then not looking so good. And you can see, I think this is that's the 50. Let's take a look at the 200. And let's look at that on the weekly scale. You can see we're very much beneath that. So until we get back above, this remains a bearish scenario. The likes of which we've really never seen before. So until we get back above 24,500-ish, at present, of course, this is going to come down as we go here. Actually, no, it's increasing. So at present, it's 24,500. Until we get back above that, I'm still macro, I'm still bearish. I still believe that we'll probably see another leg down. I'm actually hoping that happens sooner than later, because then accumulation can begin in earnest. So I hope that you found this information helpful. Again, I can't predict the future. I can just give a best guess based on what I've seen. Another thing that I wanted to show you really quickly, I forgot about this, was the cost basis of short-term versus long-term hodlers. Willy Woo posted this, so thank you to Willy Woo. But you notice what happens when the long-term hodlers cost basis actually it's higher than the short-term hodlers. That only happened a few times, and it happened every single time it was during an accumulation phase. And we're actually in the very beginning of that. So that's a good sign. that's a really good sign, because that means that we're already well into the bear market. The worst is past us. Okay. So if that gives any consolation, now, even though the halving is pretty far away, we have a year and 168 days. Like I said, several hundred days usually before leading up to that halving, overall, there's positive price action, notwithstanding a black swan event. So I am hopeful that 2023 will be a good year for many traders and hopefully some investors too. It's going to depend, but I do believe that at least by summer we're going to start to see some real movement to the upside. Yeah, but I would also be on guard. Always be alert, always be aware. This is not financial advice, but you never know when you're going to have a situation like this. This is why I always use stop losses. And this is also why I allocate more than 50% of my funds to my trading account so that I can be in and out of positions, be prepared for anything. Do not keep your money on the exchange if you don't need to, because I have seen time and time again just so many issues, so many people who have lost money, so many good, kind, intelligent people that have lost a lot of money on exchanges, and my heart goes out to you. I'm definitely I'm with you. I lost a lot of money last year, and I've been making it back slowly and steadily. But if you learn from your mistakes and you move forward. Those of you that are watching this video, I commend you for watching this far. Please give it a like, show some support, because you're going to be the ones that you've learned all the lessons. You're going to know exactly when to invest, and you're going to catch that bottom and ride it all the way up, probably to above 100K. At least that would be my projection, at least 115K headed into 2024 and beyond. So I hope that you enjoyed this video. Again, if you want to support me, check out my book, check out my course on the website. Actually, I have 5 courses. I'm actually currently making another course. I'm putting out so much content right now. I'm going to stop pretty soon, and I'm just going to let it ride. I'm not going to add anything. And that way, when the next bull run comes around, I'm just going to tell people, look, here's the book. Here was the report I wrote 2 years ago. You could have invested then. I'm not here available for anything else. I'm going to be pretty silent about all of it. So I hope that you enjoyed this video. Again, have a beautiful rest of your day.